Hi, and welcome back to Breaking Financial Myths. Friends, wherever the economy goes, whatever the market scenario is, money is always going to remain short in supply and more in demand. This makes it the most sought after commodity. The individuals borrow, the corporates borrow, entrepreneurs borrow, even the banks borrow, even the countries borrow. And this borrowing is available at a nominal cost, which is known as interest. How this interest works against you, sometimes against the lenders as well, we are going to discuss it. No inflation, no short term profits can beat the long term interests. Friends, interest is a silent killer. The common mistake made in some fields is that a significant part of the project funding is borrowed, as much as 70% sometimes. Now, who has to return this borrowed capital as well as interest? Is it the project? No, it is the individual who is behind the steering wheel, who is running the project. He has to return it. He has to take the responsibility. Now, here comes the game changer. Like, suppose you are that project in charge. How much you can work? 5 to 6 days in a week? 10 hours in a day? But my friends, interest is never on leave. You'll take a leave on Sunday, but interest is working and accumulating on Sundays, on national holidays. Even at night when you are sleeping, interest is still accumulating. घड़ी की हर टिक के साथ इंटरेस्ट बढ़ रहा है, accumulate हो रहा है, और बढ़ते बढ़ते वो बन जाता है पहाड़. When some people borrow from non-banking sources at the rate of 24% per annum and use the capital for 3, 4 or 5 years, if it is compounded, then within 3 years it will surpass the capital and become more than double. At this high interest rate, that big project or ship is surely going to sink like a Titanic. This is the stage, my friend, when the developers abandon the project, leaving the home buyers groping in the dark. Now, whosoever comes forward to bail out the project, whether the government body or the private investor, he shall do the needful only if the project is economically viable. If the outstanding is more than the receivable, then there has to be someone to absorb the losses, either the home buyers or the financial creditors, but certainly not the new investor. And similarly for the individuals also, I would say it is not a good idea to borrow. Even if you are able to borrow it easily, try to avoid it. I have mentioned in the book also. A mortgage loan is a big loan that you take from the bank when you are buying a house or any other property. Now, mort comes from the French word mortuary. It's a place where bodies are kept before burial. And gage means to pledge or promise. So you put it together, it becomes death promise. That means a borrower takes a loan and keeps on paying until his death. हमने ऐसे हालात से मजबूर बशर देखे हैं, असल तो क्या अजी हमने सूद में बिकते घर देखे हैं. हमने देखा है वज़ादार घरानों का जवाल, हमने सड़कों पर कई शाह जफर देखे हैं. Avoid borrowing on heavy interest even if you are eligible to borrow easily. Interest is a silent killer and causes a massive dent and reduces the profitability of any project. Thank you. See you again in Financial Myths. Stay connected. Bye.